All right, guys. So we are here today. We got Amazon earnings. Let's see what it does to the market. What dropped the market? Let's see. About 30 minutes ago, something happened. I'm not sure what, but something happened to tank the tech market really over the last few minutes. Here's Amazon on the left. Amazon dropped alongside with it. I'm still trying to figure out what this is. Yeah. Something dropped the market. Yeah, I'm looking at the news right now. Okay, so maybe it's Fed Waller. Fed Waller was speaking as of. Okay, so here's a couple news releases that have come out since about 2:30 market time. So the Fed tells banks they won't need to do climate stress tests. U.S. Central Bank initiated the pilot program 2 years ago. Decision impacts lenders, including J.P. Morgan and Citigroup. All right, so it says White House official says that the president is going to sign an order on Thursday sanctioning International Criminal Court for targeting. For targeting U.S. and allies, such as Trump's order puts financial visa sanctions on individuals. We also had Goolsbee speaking about 40 minutes ago. This is probably what it is. Goolsbee says the effects of tariffs on inflation may be hard to discern and says first order effects of tariffs on prices may be less important than possible impact on expectations. He says that the appearance that inflation has stalled is largely due to base effects. Says Fed needs to be mindful of overheating and deterioration, but things are largely going well. He said that would be most concerned if long-term rates were rising in lockstep with inflation expectations. So far, that is not what's happening. He feels neutral rate is well below current Fed policy, but appropriate to slow the pace of cuts to find a stopping point. Added uncertainty makes the environment for the Fed foggier. A reason to slow the pace of cuts have to take administration policies as given. He said the tariffs impacts will make it more complicated to determine what is overheating and what is a one-time price change. Would put special emphasis on things like PPI and industry contacts and monitoring how tariffs might influence prices and inflation. Long-term rates are set by complex market forces, not the Federal Reserve. So basically saying pay attention to PPI inflation data, which we actually get next week to gauge the impacts of tariffs on inflation specifically, is what he basically said. Yeah, this is a big earnings report. I'm catching back up with the chat, kind of reading what the chat's got to say. Let's do a poll here. We're going to stream the entire call and earnings. They're dropping in about 45 minutes. We'll cover those when they drop. Are you bullish or bearish on today's Amazon Q4 earnings reports? Yeah, but I guess it's Fed Waller or Goolsbee. It also could be this news right here. Like, look at this news I'm putting in chat right now. It says the White House is preparing an order to cut thousands of federal health workers. Yeah, so Nvidia ended up bouncing still today. AMD is down a little bit on the day. Microsoft is up. Palantir's up pretty big, almost up to 109s. Amazon's kind of flat. You can see it here if we zoom out. Amazon's kind of flat, slightly green on the day still from pre-market, but after market opened, we've been basically sideways. Bitcoin has fallen down some. It's at 96K or so, 96,000. Netflix still over 1,000, but pretty choppy, like sideways neutral day for Netflix. The Q, very sideways neutral day as well. Palantir just broke highs of the day too, though. Look at Palantir PLTR. This thing is crazy, up to 109s right now. I don't think we have any other big earnings. Do we? I don't think so. We got Amazon, Elf, Cloudflare, Affirm, Fortinet, Pinterest, CleanSpark, Microchip Tech, Expedia, Bill.com, Skechers, Lumentum, Illumina, GoPro, Paylocity, Boyd Gaming, a couple other ones. Nothing really big. Biggest one is Amazon, of course. It drops right at the closing bell. Elf is supposed to drop at 4:05 p.m. So I was taking a nice little nap when you guys got me over here streaming Amazon earnings. No, it's good. So let's hype up this earnings call. Let's talk about it. So let's talk about what to pay attention to. All right, so let's hype this up a little bit, shall we? Amazon. Will it be a blowout quarter for Amazon? Amazon is to report its highly anticipated Q4 2024 earnings today, and the stakes couldn't be higher. Holiday sales, Amazon Web Services, growth, and macroeconomic trends all in focus. Investors and traders are going to be bracing for a potentially market-moving event. Will Amazon crush expectations and surge to new highs, or will it face headwinds that shake up the tech sector? What's at stake? Amazon has been on an absolute tear in 2024, benefiting from strong consumer demand, a booming AI cloud segment, and continued dominance in e-commerce. But now it's time to see if the numbers back up the hype. E-commerce growth is one thing we want to pay attention to. With inflation cooling and consumer spending rebounding, Amazon's Q4 was primed for record-breaking holiday sales. Did Prime Day and the holiday season deliver blockbuster revenue, though? Let's see. Amazon Web Services is another front to watch. The cloud business is Amazon's cash cow, and the AI boom has investors laser focused on Amazon Web Services growth. If AWS revenue smashes estimates, it could send Amazon soaring. Advertising surge. Amazon is another point to watch. Advertising and kind of what kind of metrics they have from that. Amazon's ad revenue has quietly become a powerhouse, outpacing some social media giants. Did Q4 mark another quarter of big growth? Here is something to watch. You also want to pay attention to margins and profitability after years of heavy investments, where it did kind of affect their EPS and some of their ratios, PE ratios, because of the EPS and like all the other stuff. They had some big investments in some other companies. After years of that heavy investment, Amazon is finally seeing expanding margins, which is good. Will Q4 show further improvements in operating income, sending another bullish signal for Amazon stock? I think the big question is, can they beat estimates? Analysts have set the bar high with expectations for revenue around $164 billion. If we look at Amazon revenue historically here, we take a look at Amazon revenue historically. Amazon, again, really kind of like Google, one of the best long-term charts I've ever seen. Beautiful graph here. Their last quarter was 158. Today they're expecting 165. It's not quite their strongest ever, so if we come in as expected, we'll look about right here for Amazon. If we come in as expected. So slightly under what the current bar is, but still a very strong chart. The real question here, is this kind of breaks the trend unless we come in wildly over expected. And maybe that's what they're planning to do here. Looking at the trend, I think a really good even level for revenue is 169. If we don't, growth is diminishing a little bit if we don't break 169, because you can kind of see for fourth quarter, every time fourth quarter shows up, boom, right here. Boom, right here. Higher than the last fourth quarter. So year over year is what we're going to look at a lot today, I think, right? Because year over year, the fourth quarter has been the powerhouse quarter. And looking at a trailing 12-month chart here over the last 15 years, That's what we want to pay attention to. And so if they show up as expected, it's actually a little bit lower year to year. And it does say some things about Amazon's growth, if I'm being honest, right? Like if we look at this chart objectively. But maybe they're underestimating it so they can kind of beat it. And, you know, to beat this level, we need to be over 170, basically, over 169.96. We'll see if they can do that. EPS is projected at 112 for Amazon. So, yeah, EPS is expected at $1.12 for Amazon. Taking a look at the EPS here. $1.12 is a little light, but for their fourth quarter. But maybe their margins are the worst during the fourth quarter too. Here's the fourth quarter of 2023. So I mean, if they do this, let's see, what is this? This is the fourth quarter. So yeah, this is less consistent growth and trends for the EPS. It's margins, and so you know we'll see if they can beat it anywhere near their highest ever, which is 138. Again, we're gonna be watching AWS growth. We're gonna be watching AWS growth here a lot as well. AWS growth is expected to accelerate, possibly exceeding 14 to 16% year over year. Whispers from the street suggest Amazon could surprise to the upside thanks to record-breaking holiday demand and AI-driven cloud expansion. So we're going to watch for that. If Amazon posts an EPS beat and bullish forward guidance, maybe we'll have a post-earnings rally. It's possible for sure if we have good guidance here for Amazon. Tech stocks leading the market. Amazon's earnings could set the tone for the entire sector. A strong report could push Amazon to new highs. A miss might, you know, cause a pullback in tech. Maybe we got to watch for that. And so yeah, let's see what happens here. What do you guys think? Yeah, I don't know if we have any big earnings next week. This is like the last big one. We've streamed all the other ones. Yeah, I got you. I'll put a timer up. Amazon stagnating a little bit again. Here's the Q. Q bounced back up a little bit. I don't know why that dropped. I guess the Fed speaker caused that drop. We got 39.5 minutes right now, chat. Jobless claims today came in a little bit higher than expected. So we'll see what that means. All right, so their expected EPS is 112 a share. Expected revenue is, what is it? I can't remember what it was. And I'm showing 187.2 billion, and I'm showing 152 a share. So I think, yeah, I think whatever source I had was wrong. So I'm showing 152 a share for expected EPS. Revenue is expected at 187. So if they hit these numbers, actually, it'll be their strongest quarter ever, and it'll continue the growth for Amazon. So I'm not sure where the first numbers came from. My bad, guys. But yeah, these are the correct numbers. So yeah, we'll see if we hit that or not. But yeah, that's what we're looking at. So again, I'm just to reiterate, expected EPS is 152 a share. Now revenue is 187.28 billion. So much stronger than originally thought. Amazon's going to tank here, do you think? But I don't think they can keep up with expectations. No, I don't trade that. I don't trade secured overnight financing rate data. I just don't trade it. Alright, guys, so yeah. Yeah, so again, now I asked AI to update it. So again, the holiday season, including events like Prime Day, is anticipated to have bolstered Amazon's online sales. Analysts forecast online store sales to be approximately $74.7 billion, up from $70.5 billion last year. Advertising revenue has been experiencing growth. Quarter 3 24 advertising revenue grew by 19% year over year to $14.3 billion. They're expecting it to continue into quarter 4. Again, AI has been making big investments into AI, or Amazon has been making a lot of big investments into AI with Amazon Web Services. We'll see if they enhance service offering and drive future growth with this earnings report. Tariff and trade policy concerns are something you want to pay attention to with Amazon as well. Amazon is huge and very good at making money. Yeah, Amazon, honestly, Amazon is one of the stocks that I'm the most optimistic in, to be completely honest. They are just incredibly strong, and they always have been. And you got to think about the nature of their business. Like, everybody uses them. Everybody uses them in the U.S., at least for the most part. And so I'm confident in their strength, as well as I'm confident in their ability not to go obsolete as well. I just don't think they're going to go obsolete. I think they're a huge company, and so I think they'll be fine in that regard. Yeah, NVIDIA earnings mid this month. They're like February 26th. They're in 20 days for NVIDIA earnings. That's the biggest earnings report of the month, to be honest. That's the biggest earnings report of every season is NVIDIA's earnings for the most part, just because of all the craziness that we've seen. Amazon will hit expected numbers, you think, but unfortunately guidance for cloud business will be lower. That's possible for sure. All right. What's up, Tobias? Next is NVIDIA. You got the timer up. Yeah, looking at our poll, we got 72% are bullish, 28% are bearish. Skechers. Gotta drink some caffeine here. Yeah, I had somebody asking me about secured overnight financing rates. It's the benchmark rate that reflects the cost of borrowing cash overnight using treasuries. Yeah, so it's at 4.3%. It's basically the federal rate. If you could have available what forecast for unemployment, etc. tomorrow. Yeah, so unemployment's expected at 4.1%. Tomorrow for payroll numbers are expecting a little bit lower than last time they showed up at 250 plus, 256,000 non-farm payrolls. Tomorrow they're expecting a little bit under 170, 169,000. Unemployment they're expecting at 4.1%. Hourly wages they're expecting at 0.3%. Year over year hourly wages expected at 3.7%. And then again, next week we got CPI data, which, you heard Fed barking, talking about this earlier. Yeah, all good, Femi, no worries, man. Amazon paid too much for cloud. Maybe. They're trying to grow that business. Cloud's the future in their mind where storage is concerned, and so they're trying to grow that business a lot. It's understandable. I think that's kind of what you do if you're Amazon right now. I don't know if you should buy calls right now. Nobody knows. That means the stock will drop. I mean, maybe. Should I buy calls right now? No idea. All right, NASDAQ's still pretty flat. When I see the NASDAQ on days like today, I genuinely wonder, there's got to be a better way to attack this chop. It's such an easy chop to attack. Like, look at this. Really, once you break this level here, it's like value. This level here is this level here is value for shorts, weak for longs. This level here is value for longs, weak for shorts. I think that makes a lot of sense, especially with all the confirmations. Palantir close to 110. Is it still pushing up for PLTR? Man, that's been a crazy time. It's up to almost, yeah. The problem with Palantir for me is that this is mostly hype. The PE ratio doesn't anywhere close to justify this, including their latest earnings report. So their PE ratio right now is in the hundreds. And so it's mostly momentum right now. I'm not saying it's not good. It's just mostly momentum. It's not fundamentals causing this run. When is Supermicro's earnings? Somebody said they're next week. It was up a lot today. It's up to almost $35 a share. Yeah, so next Tuesday is Supermicro semiconductor earnings. That's a day where we also have the semi-annual monetary policy report with Congress with Powell. ELF at 87s. How's ELF's growth been? It's had a rough time the last few years. ELF Beauty. Cloudflare, which is net. They've had a good run in 25 so far. 24 was neutral, basically. They've been trending up, though, for the last 4 or 5 years. Anything else big? Pinterest. I remember when Pinterest IPO'd today. Or I remember when Pinterest IPO'd. It has earnings today. It's been sideways basically since August. Up a little bit in the last few years, but not a lot. Still pretty low from its highs. Its highs are at 90. It's at 33s right now for net. Or for Pinterest, I mean. We got Clean Spark as well. I don't know if we have any other big earnings. Yeah, there's the NASDAQ over the 200 exponential. Look at Uber reverse from yesterday. Didn't it have earnings? Productivity and claims made the NASDAQ over 2182, selling all day up there. Range bound? Yeah, that's definitely a word. Bullish or bearish on Palantir? I think it's probably a good stock long term, but you never really know. It's never definitive, you know. Like, I like it, but I also think there's a chance it pulls back just based off of how much it's up, unless it starts to really earn more revenue or, you know, and bring in better margins. It's up a lot, and so I'm kind of neutral on it. I like it as a stock long term, but I think short term there's risks. Yeah, I have a 22 average. Yeah, I'm sure you're super happy. All right, guys, we still got 25 minutes here. 25 minutes. And again, Amazon earnings are releasing right at the close. We gotta switch my thumbnail up. I hope I saved this one. I don't think I did. All right. Should I leave Jeff Bezos up? I forgot Jeff Bezos wasn't the CEO anymore. Let me get this up. All right, guys. Hey, Amazon earnings supposed to release right at 4 p.m. Eastern Standard Time. So right at 4 p.m. we're supposed to get this release. We'll see what that means. Yeah, so look at the Q still popping back up. All right, chat. So let me see. Let me find this real quick. Again, honestly, Amazon's expecting their strongest quarter ever. We'll see if they hit it. We'll see if they hit it. I think they could. I gotta make a thumbnail real quick. You guys will see how quickly I make these things, man. Alright. So we got the background removed by this guy. I got Bezos in there. I forgot Bezos wasn't the guy anymore. There we go. Cheers, John. What's up, Lucky? With Palantir, it all depends on where you're at with it. If you're just now deciding you want to get in, that's scary. If you're already in a position with low average, it's easy to hold. Yeah, for sure. They're about to smash. Obviously, they'll hit revenue after Christmas. Yeah, I mean, I made a bunch, Mike, doing a lot of different things. Like, I was a software developer, React Native, JavaScript developer. But I also made a lot in crypto, like, and so again, I don't have to work anymore, and I do make money streaming, you know, of course. But also was a real estate agent for a while, you know, just kind of a lot of different income streams. Yeah, I mean, yeah, I guess I don't know. I liked my thumbnail better with. What do you guys think? Should I use this guy here? Should I use green lettering? I think the green lettering really pops, to be honest. Or should I use the one that I already had, which is this one with the orange lettering? I figure orange lettering is kind of like Amazon, though. It's the only reason I like the orange one is because it is kind of like Amazon, right? And so which one do you guys think, green or orange? It's kind of yellowish, but that's okay. They'll hit revenue after Christmas. Well, yeah. I think they'll have good revenue. How much their revenue is going to be is all relative, though. We'll have to see. Could be anything, to be honest. What color? Yellow or green? You think it's about to dump hard? Looking at our poll, 66% of people are bullish on Q4 Amazon earnings. 34% are bearish. MicroStrategy down to 327s. 327s. Downtrending all day. Honestly, MicroStrategy is down just because Bitcoin's down, though. That's what they've done. Yeah, Alibaba it's had a tough run too, man. Alibaba stock, if you take a look at it on the right, it's over 100. It got over for a while. It's up to 100 now, but yeah. It's been trending negatively. Mostly US. It's only strategy now, microlist. Yeah. Yeah, Amazon sales are almost all in the US. Amazon's overseas, but it's certainly not as common. And so, yeah, Amazon has warehouses in other countries outside the U.S. It has like logistics centers in Germany. It has fulfillment centers in the UK and England, warehouses in France, warehouses in Italy, logistics centers in Spain, logistics centers in Poland, the Czech Republic. It's got some as well. 100 centers globally in the US, UK, Canada, and Europe. So it is a worldwide company for sure. Number one in Europe, yeah. I mean, I get that. Yeah, I don't know if you're talking about React, the JavaScript library, but the Facebook library. Yeah, so MicroStrategy. It's got about 0.00186 regular share Bitcoin. Kind of shows you where its holdings are. My apartment is Amazon. How would you explain those things to a teenager kid? I would tell him not to trade them. And that, yeah, they're not allowed here in the U.S. not to trade them. You know, good earnings, bad forecast due to possible international issues with tariffs. If that's the case, typically guidance is going to influence everything else, right? So if a company has bad guidance, it's usually going to, even if it has good EPS and revenue, it's going to a lot of the time go down. Not always. Again, I'm not an investment professional. Nothing here is investment advice or forward looking. Remember, I am terrible and have no idea what I'm talking about. Might be wildly wrong about anything and everything I say here. Do not copy me. I'm not an investment professional. Understand all this stuff. Understand CFTC 4.41. Yeah, most of Amazon's business is domestic for sure. In 2023, U.S. had $395.64 billion in net sales, making it Amazon's largest market. Germany in 2023 had $37.6 billion in net sales, making it Amazon's second. I'm pretty sure it's yeah, so today is Amazon quarter 4. The call's at 5 p.m. The earnings are going to drop right at 4 p.m. So we're going to have about an hour to kind of sit on the news, see what happens to the stock prices afterwards. Got a couple other earnings dropping after the close too, so we'll cover all of them. What happened to Salesforce? Yeah, Salesforce dipped a lot today too. I guess, did they have earnings this morning? Probably, right? Third quarter non-GAAP GAAP diluted net income per share 158, non-GAAP diluted net income per share 241. Jim Cramer says buy the dip on Salesforce. I don't know if that's good or bad. That's probably bad based off of his history. Yeah, Salesforce had earnings in December. Nope. They should be up. Should see store and prescription these numbers. Go inverse. How much can Amazon jump in after hours? I'd have to look at the implied volatility. Implied volatility on Amazon. Get out of here. This thing. P ratio for Amazon's about 50, so it's pretty high. I'm showing the implied volatilities around. Hold on, let's see. 141% IV. It's moved a lot, but as we get closer to the bell, it's currently, yeah. It's at 0.33. Yeah, so it's at, I'm showing 39% right now. Is there a 30-day option implied volatility? I'm sure it's going to go a little bit higher ahead of the bell. Palantir just broke 110s. It's up to 110.60s here. Look at Palantir right now. Amazon ripping back up too. I guess people are optimistic leading into the earnings report. Look at Palantir. Almost 111s right now. Q was up. Supermicro was up. Nvidia's bouncing back. Netflix is bouncing back. Is AMD bouncing back? I don't trust Kramer for financial advice, but he's great at explaining what the market wants you to think. Yeah, that's probably true. Yeah, remember, guys, tomorrow's non-farm payroll report is massive. That's the big report, I think. Amazon, we'll see. We don't really have any other big earnings today, so it's just Amazon. All right, so Amazon is right at this triple top level. I think you got to pay attention to this spot right here at 235 or 239.50. It's hit right around this range over and over again. You could also just look at straight up 239 to potentially be another level right here. I think both of those levels are important to probably pay attention to right now with earnings looming in 8 minutes, a little bit less than 8 minutes, you know. Yeah, I mean, I'm not the one that put you in timeout, Kevin. I'm not sure what it was for, but, you know, you'll be all right. All right, guys, 6 minutes left. 7 minutes, really. Exactly, 7 minutes. Yeah, it's a big report, guys. Let's see what we get. All right, remember, guys, let's take a look at the expected numbers and all the stuff that comes along with this. All right, so Amazon revenue projected at 187.3 billion, making a 10% increase year over year. EPS expected at 149, up from $1 in the prior year at the same time. Amazon Web Services to be a big contributor to Amazon's profitability for quarter one. AWS revenue is expected to be around 28.8 billion. So watch for the highs or lows of that, whether we come in higher than 28.8 billion for AWS or lower than 28.8 billion for AWS. It's a big thing to watch for. We showed up at 24.2 billion in the previous year. E-commerce performance the holiday season, including events like Prime Day, anticipated to have bolstered Amazon's online sales. Forecast online store sales to be approximately 74.7 billion, up from 70.5 billion last year. So watch for e-commerce beat or missing on those numbers. Advertising revenue has been experiencing growth in quarter 3 24. Advertising revenue grew by 19% year over year to 14.3 billion. The upward trend is expected to continue into quarter 4. So we'll see what happens there. Look for AI investments. Global economic factors from the tariffs is another big story. Look at the NASDAQ ripping up. So we tapped 29.66, really at 29.5 level, and now we're dipping down. Palantir is one of the stocks that are shooting up. Another big story has been Apple. Apple's breaking highs right before the closing bell today. Just broke 233.11s. So highs of the day are still a little bit up there, actually. They're at 233s, 80s, 234s. But the NASDAQ broke highs of the day. Amazon's up there, but rejected right before the close. Meta has been rebounding from tapping the previous closing price earlier. Netflix testing highs of the day also, I think. Yeah, Netflix getting close to highs of the day as well. Google back up after earnings, up to 193.50s here. Again, we got less than 5 minutes now, about 4 minutes left. Range bound. Yes. We're going to cover the whole report as soon as it drops, guys. Don't worry. All right, so all right, guys, here we go. All right, guys, 3 minutes. 3 minutes. Five positions. Yeah, Amazon's scheduled to drop right at the closing bell, too. So, like Apple, for instance, waited until 4:15. Amazon is scheduled right at the closing bell at 4 p.m. So we'll see what that looks like. Keep an eye on AZTR. Just bought in 5 positions. If we have Amazon good numbers and good guidance tomorrow, reach 250, maybe. All right, guys, 2 minutes. Again, hit the live button next to the play button. You'll be caught up on stream. We have no latency on our stream, so if it's delayed, it might be you. Just hit the live button next to it. You should be caught up pretty quickly. All right, guys, 1.5 minutes. Are you talking about the foot lock or the ankle lock from Backmount, Tony? Is there a formal speech on this, or do they just publish numbers? Well, at 4 p.m., they're going to publish the numbers. At 5 p.m., they're going to do the actual call. All right, guys, we got less than a minute left. Less than a minute. All right, guys, 1 minute. It's just you. Lucky. That's just you. $20 seconds, guys. Hit the live button next to the play button. All right, I'm gonna put up Amazon's other chart here. We got some other stocks that we're gonna look at, but here we go. 15 seconds. Timer's a little bit early. We got 10 seconds left. 7, 6, 5, 4, 3, 2, 1. Here's the drop. All right, watch Amazon here, guys. Let's wait for the numbers. Watch Amazon here. Let's wait for the numbers to drop. Watch for volatility. Nothing yet. Nothing yet. Let's watch Amazon. Wait for numbers. Nothing yet. Watch for the candlestick movement. 238.80s for Amazon. Let's wait. Nothing yet. Chat still waiting. No movement. We got about 10 seconds left. Let's see if they do it right at 4:01. All right, there they are. The numbers are out. They're at 235s, 233s. They are down originally from the report. Amazon. Amazon posted 186 versus 150 expected EPS. Net sales of 187.79 versus 187.32 billion expected. Better than expected revenue and EPS for the fourth quarter. Amazon Web Services net sales showed up at 28.79 billion versus 28.82 billion expected. Worse than expected AWS net sales, dragging Amazon down right now. Again, Amazon posted worse than expected AWS net sales at 28.79 versus 28.82 expected. They are now down. They beat EPS, beat revenue, missed Amazon Web Services net sales numbers here. So again, they beat EPS, beat revenue, missed AWS net sales, and they are down. We'll put these numbers up in chat as well so you can see them. We'll also put them on screen, but again, they missed AWS numbers and beat everything else, but they're still down pretty big from this. So we'll put these numbers on screen. Bear with me. All right, so here's their numbers so far. Let me shrink this a little bit so you guys can see it. But again, they beat EPS, beat revenue. What a drop. Again, guys, so far they beat EPS 150 versus, they showed 186 versus 150 expected. Net sales of 187.79. Expected 187.32. Amazon quarter four, AWS net sales showed up slightly lower than expected, but Amazon is down to 230s from this, or down to 228s from 230s here for AWS numbers missing. We'll continue to report the numbers as we get them, guys. So stick around. So again, we're gonna start throwing their numbers out in chat. Quarter four net came in at 20 billion. Product sales for the fourth quarter showed up at 82.23 billion. We're gonna start littering these in the chat. Quarter four sales again, 187.8 billion. International segment sales 43.4 billion. Quarter four services sales 105.57 billion. Operating margin 11.3%, a little bit lower, I think, than they expected for their operating margin. Quarter EPS came in at 186, beat the 150 estimates. Quarter one sales guidance came in for 151 to 155.5 billion. So here's their guidance numbers. North American segment sales showed up at 115.6 billion here. And again, we're going to go ahead and read. So it says net sales increased 10% to 187.8 billion in the fourth quarter, compared with 170 in the fourth quarter of 23, excluding the 0.9 billion unfavorable impact from year-over-year changes in foreign exchange rates throughout the quarter. Net sales increased 11% compared with fourth quarter 2023. North American segment sales increased 10% year-over-year to 115.6 billion. International segment sales increased 8% year-over-year to 43.4 billion, or increased 9% excluding changes from FX. AWS segment increased 19% in sales year over year to 28.8 billion, still lower than expected though. Op income 21.2 billion in the fourth quarter compared to 13.2 in fourth quarter 2023. There's the numbers right there. Amazon bouncing all the way back. First move was the wrong move here. Yeah, so their numbers are out. Guidance? Yeah, I mean, their guidance was quarter one sales showed up at 155.5 billion. 155.5 billion. And again, we did a breakdown of this. Amazon provided guidance for first quarter 2025, projecting net sales between 151 and 155, which represents a growth of 5 to 9% compared to the first quarter of 2024. This forecast accounts for an anticipated unfavorable impact of approximately 2.1 billion due to FX fluctuations. The company notes that the previous year's first quarter benefited from an extra day due to leap year, contributing to about 1.5 billion in net sales. In terms of operating income, they expect a range between 14 and 18 compared to 15.3 in the first quarter 2024. And analysts had anticipated higher guidance, with some expecting first quarter sales to be around 158.7 billion for guidance. So a little bit more conservative outlook than expected. Lower guidance, probably why the drop happened, as well as the AWS miss that we saw there. Just wanted to close over under 235. Yeah, I mean, you should be fine there. Healthy rebound. Yeah, for sure. Bounce back quick. Yeah, I mean, they missed their guidance by a little bit. Their AWS numbers missed the expected numbers there as well. And so it's slightly down. It's really pretty flat. Like, you got to think about the numbers showed up here. And so we're right here. It's not a huge difference. Like, it's a pretty underwhelming reaction so far. I would rather an underwhelming than some crazy drop, of course. Yeah, all good, subscriber guy. It's all good, brother. Again, we got non-farm payrolls tomorrow, guys. Be ready. Also, we're going to try to stream the full earnings call. So stick around. We're going to try to stream that. All right, so again, the must-watch event for Amazon is this earnings call coming up. Amazon just delivered the numbers, and the main event is in about 50 minutes. We're going to stream it live. This is where we get inside the scoop of CEO Andy Jassy and their leadership team on the next one for the biggest company in the world, really, one of the biggest companies. Again, we got to watch AWS. They missed their numbers by a slight expectational miss, but we got to watch for AWS and AI expansion. Amazon Web Services is their crown jewel. Investors are waiting to hear how AI is driving cloud growth. Will he hint about new AI initiatives that could challenge other companies? E-commerce and holiday sales, record-breaking numbers this year. They beat EPS by a big margin. They beat revenue by a small margin, but they beat both EPS and revenue for Q4 numbers. And so let's see what happens there. How much of that was by Prime, fast shipping, new retail strategies, all that good stuff. We got to watch for advertising information. Their ad business has been on fire, growing at a crazy pace. This is a serious competitor to others in advertising now. Amazon's operating income guidance was strong. Will they reveal plans to boost profits further while still investing in growth? Are they going to do any stock buybacks or dividends? I think they would have already announced that, to be honest. So I think that's a no. We did have Pinterest also released. We're going to put Pinterest's numbers in the chat. They posted 56 miss EPS, flat revenue. So a miss on EPS, flat revenue here. Where did my screen go? Palantir is getting silly now. Yeah, we'll see. Again, so here is Skechers numbers. I think this is Skechers. Oh, that's Pinterest. Skechers missed EPS, missed revenue. Pinterest missed EPS, flat revenue. Putting some of those out in chat. Fortinet also posted 74-cent adjusted EPS versus 61 cents expected. Revenue of 1.66 versus 1.59 expected. Let's put those numbers up. We had Take-Two Interactive. They had dropped numbers here. We'll put those up in chat too. Let's see. What's Palantir doing? Palantir flying up to almost 112s. Wow. Clean Spark? Yeah, we'll cover them if they drop. Let's see if they did. I don't think they did, but we'll cover them if they do drop. Yeah, so Fortinet posted numbers. Amazon has seasonal sales in this earnings going to look better for Affirm. Yeah, I don't see any other ones out. We're waiting for the rest. Again, we can kind of see Skechers down pretty big. Pinterest up pretty big. Fortinet up to almost 111s. CLSK up to about 11s. They're gapping up. It looks like their earnings are probably out. I don't see them yet, though. We got to wait. Take-Two. There we go. TTWO up, gapping up pretty big to almost 200. Amazon's starting to rebound. I mean, we still got a little bit of time. Netflix climbing back up, is it? Up to 10, 16, 50 for Netflix. Yeah, appreciate the love, guys. The data's right here underneath me, and we posted most of the other ones in chat already. Amazon Q4 operating margin 11.3%, Q4 EPS 186, beat EPS expectations of 150. Q1 sales guidance 155.5 billion. I think they expected like 168 billion or so for guidance, so they slightly missed there. Guidance wise, it's probably one of the reasons they reacted negatively. They see Q1 operating profits to be between 14 and 18 billion. And so those are most of the numbers so far. We're going to keep tracking these here. Again, Amazon Web segment sales increased to 28.2 billion, but they missed expectations here, though. Again, hit the live button. Some of you guys are delayed, I can tell just by watching. Some of you guys are delayed on the stream. Netflix at 10/16s. Fragile market. Yeah, it's been a volatile time, though. We've had tariff news. We've had a lot of stuff that's kind of dropped. And so it's been a super volatile time, to be honest. So that's how it goes, I think. See, we're watching some other stuff too. There's February 3rd. Trying to watch for volatility today. It's been kind of a flat, boring day, to be honest. $112 on Palantir, yeah, for sure. Palantir, man, it's just been absolutely crazy here. Palantir up to 112s. The question goes, like, how extended is this thing? The PE ratio is crazy. It really is crazy. Elf, did Elf drop their numbers yet? Whoa, look at Elf. Here, let me put an actual chart up. Look at Elf right now. Huge percentage drop. This is a big percentage drop. This is like, it's not quite 25%, but it's close. It's like 23 or something, like 22 or 23% if the math in my head is correct. It's a big drop. It dropped from basically 89 down to 70. Yeah, 22% roughly, from like 88, 89 down to 70. Or from 90 down to 70, I mean, it's about 22%, 23%. But man, $72 for ELF, ELF. What did their numbers show? It's got to be something not good. Microchip Tech posted 20-cent EPS versus 28-cent expected. Missed EPS revenue 1.03 versus 1.06. Microchip Tech missed EPS and revenue. Affirm posted a 15-cent loss per share. No, I don't know what Affirm showed. What did ELF end up doing? Affirm posted 23-cent profit per share versus 20-cent loss expected. Revenue, I haven't seen revenue show up yet. Some of these I haven't. Let's see, ELF. Yeah, ELF posted 74-cent EPS. They expected 76. Revenue of $355.3, beat the $329 expected. How did they miss so bad? What did they do? Why is ELF down, 20-something% on good EPS and revenue? What was their guidance? I don't even see guidance for ELF. It's weird they're down this much, to be honest. Oh yeah, here's guidance. 333 versus 354. This is why. I see why. Never mind. ELF missed huge on guidance numbers. Huge. Here's ELF's guidance expectations versus reality. All right, so Elf thought they would show up at about 354 share for EPS guidance. They showed 332 now, so much lower expectations. Revenue showed up at 1.31 billion for future projections. They originally expected 1.34 billion, so much weaker revenue and EPS guidance expectations now, and that's causing them to dump. That's what happened here. Yeah, Alpha's down on bad guidance numbers. They expected 354 for EPS guidance. They showed 332, so a pretty big miss for guidance is what this is. Revenue at 1.31 billion. They expected originally 1.34. Amazon beat EPS and revenue. They slightly missed AWS guidance, but they've kind of rebounded back up a little bit. So it's kind of nuanced for Amazon why they reacted negatively originally. They beat EPS and revenue by a pretty big margin, to be honest. Had their strongest quarter ever for fourth quarter especially. But they thought they would be a little bit stronger for guidance, number one, and for AWS net sales, I'm pretty sure. So they missed EPS, or they missed guidance expectations by a small margin, and they had worse AWS numbers than expected, which ultimately made them react negatively originally. It doesn't mean it's going to stay out here, but that's what happened. Yeah, so we got Amazon's earnings call coming soon here. Yeah, so this is quarter 4 earnings. Get that out of here. All right, so Amazon's right back up there. It's at 234s, man. Look at Elf fall. Elf is down big. Try to see if we got any updates on that. Oh, man. Elf is down big. Affirm, Principal Holdings, Microchip Tech. Yeah. CapEx. Let me see if I can find it. Okay, so they did not provide specific figures for CapEx with the quarter. However, earlier statements from the company indicated plans to allocate approximately $75 billion towards CapEx in 24, focusing on data centers and servers to support AWS and AI. I think that news came out earlier that they were going to do $75 billion for CapEx this year, right? Or is that a? I'm pretty sure. Yeah, cloud growth lagged a little bit in their Amazon service. So again, Amazon beat quarterly revenue estimates. Cloud growth lagged a little bit behind. Yeah, I don't know if that was them or not. I feel like that was another company, and this might be. Yeah, Elf all the way down big. I don't know the makeup market, so I can't really say whether Elf down here at $69 is a good buy or not. I don't know if that's right, Ido, regarding CapEx. I really don't know. I'm not sure. We'll just have to wait and see. I'll have to confirm it. I'm looking it up now. So just, yeah, give me a second. I got you. Amazon company cloud unit AWS reported a 19% rise in revenue to 28.79 bill, falling short of estimates. Cloud weakness comes at a time when investors, and I'm quoting a Reuters article, comes at a time when investors have growing increasingly impatient with big tech's multi-billion-dollar capital spending and are hungry for returns from the hefty AI investments. Amazon's retail business helped offset this, though, with the company reporting online sales of 7% growth in the quarter to $75.56 billion, compared with $74.5 billion estimates, so better than expected there. Revenue of $187.8 billion in the fourth quarter, which was good. All right, again, NVIDIA testing highs too. Yeah, so remember, so in quarter three, Amazon announced plans to invest about $75 billion in CapEx for the year, with a significant portion allocated to AWS. All right. All right, so Amazon anticipates increasing its CapEx in 2025, exceeding $75 billion spent in 2024 to further AWS and AI is what I'm showing. So it might be more than $75 billion, but again, don't quote me on this. I'm just trying to dig deeper and try to find the right answer there. Elf is at 60. Elf is back up to 70. Look at Elf all the way down here. It doesn't look bad, honestly, for a purchase, but who knows, man. Bill is down. Yeah, Bill.com had earnings. I'm afraid AI turns out to be a fiasco, maybe. It might. Who knows, man? No word on CapEx, yeah. I don't think they announced it for this year, to be honest. Also, guys, if you haven't already, check out my sponsor. If you want to learn to day trade, do not risk your own money. Almost all day traders lose. I think that's the same regardless of where you go. Most day traders are going to lose. A lot of nonsense marketing about getting rich quick day trading. Most day traders lose. Instead, limit your risk. try a funded account program. It's kind of like a funded account challenge. They test your skill. It's a challenge. They give you a demo. The base one is a $50K demo. If you can make $3K in profit without losing $2K, following their rules and conditions, it's kind of like a souped up demo account. If you do all that stuff, they fund you $50K with a 90% split, and they've paid out almost $200 million in almost 4 years. They fund thousands of traders. They're the most legit one in the world. Even if you use their native platform, TopStepX, there's zero commission, which makes it a little bit easier to like scale in and out with small size once you are funded. Great way to learn how to day trade, teaches you how to follow rules, just really, really useful. And if you want to check it out, I'll put the link up. There's no PDT in futures. You can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. But again, they're an affiliate of mine, so I'm biased, of course. Confirm all this with them. Not an investment professional. Can't guarantee anything. Understand CFTC 4.41. Hypothetical or simulated performance have limitations. But if you want to check it out, there's the link in chat. Great way to help support the channel here. Again, so it looks like, honestly, Apple's earnings were much more hyped than Amazon's. I'm not saying Amazon's aren't big, but Amazon's kind of flat, didn't really move markets. It's not like Apple's the other day, which kind of moved a lot of different things. Looking deeper into some of this news, though. All right, so Jassy highlighted a successful holiday season. Q1 guidance disappoints investors. And so again, let's take a look at Amazon's actual quotes here that they did from the report. All right, so here's the release. They said, quote, this is the quote from Amazon just now. Okay, again, they said, quote, the holiday shopping season was the most successful yet for Amazon, and we appreciate the support of our customers, selling partners, and employees who helped make it so. Andy Jassy, president and CEO, he said, quote, when we look back on this quarter several years from now, I suspect that we'll most remember is the remarkable innovation delivered across all of our businesses, none more so than AWS, where we introduced our new Trainium 2 AI chip, our own foundation model in Amazon Nova, a plethora of new models and features in Amazon Bedrock that give customers flexibility and cost saving, liberating transformations in Amazon Q to migrate from old problems, and the next edition of Amazon SageMaker to pull data, analytics, and AI together more concertedly. These benefits are often realized by customers and the business several months down the road, but these substantial enablers in this emerging technology environment, and we're excited to see what customers build. So some of the highlights since the company's last earning announcements include that Amazon delivered at its fastest speeds ever in Prime for 2024 for Prime members, delivered over 65% more items to U.S. Prime members the same day or overnight than in Q4 of 2023. They held a record-breaking Black Friday week and Cyber Monday deal event, was named the lowest priced U.S. retailer by Profitero for 8 years in a row. The study found Amazon's online prices were an average of 14% less than other major U.S. retailers. They launched Amazon Haul, a new shopping experience, and Amazon U.S. shopping app and mobile site with ultra-low prices. They drew 50 million worldwide viewers to Red One in its first 4 days, making it Amazon MGM Studios' most watched film debut ever. Had the biggest Q4 for Kindle devices in over a decade. Held 13 AWS and VIT, 55,000 plus person attendees, and 1.8 million live stream viewers, and more. They got a report here. But yeah, Amazon Supermicro Semiconductors is down. Look at this. Look at SMCI, guys. Whoa. Or I don't know what this was. I looked at it for a second, it was dropping, but maybe it was just some rogue order getting filled in after hours. Maybe that's the case. Amazon's still pushing up. Look at this kind of a flag triangle-like pattern here. Look at that for Amazon. We'll see what happens. Carvana's just moved so much. Carvana, to me, it's risky, but it's up so much over the last couple years that I'm just not buying it. Like Carvana, look at this chart. This is too risky of a chart for me personally. I'm not telling you buy whatever you want to buy, but look at Carvana. This thing went way down here and then way back up to 263.17s. So I mean, personally, I'm just not interested in buying that. But let me know what you guys think. All right, so we ended the poll. We got over 1,000 votes. 71% are bullish, 28% are bearish. What's another good poll? Are you bullish? Does Amazon close green today? Is, I think, a great question. Does the Amazon share price close green today? Yes or no? Vote on that poll. That's the poll I want to know. Do they close green today? Well, Amazon's technically still down from their earnings report. They're not. They are slightly green right now, but they're down. It depends on what you look at it. So here's where their earnings came out right here. So technically they're still below it, but here's the previous closing price. This light blue line right here is the previous close. That's the level at which it closed yesterday. So technically it's still green today. Technically, yes. It's still, but it is under where it closed the day. So it closed higher than this just now. 30 minutes ago it closed a little bit higher than this, but it dropped from earnings. Still technically green on the day relative to yesterday's close. Amazon beat EPS. They beat revenue. They had a slight miss on AWS numbers as well as a slight miss on guidance, I'm pretty sure. And Nvidia making a move here. Look at Nvidia in after hours, almost back up to 130s. So yeah, Amazon, let's go through the numbers again. I got you guys. Amazon posted Q1 revenue guidance at $155.5 billion. I'll put this up on the chat versus almost versus $148.5 billion expected. Oh, that's not the right link. Hold on. Come on, copy and paste. There we go. So yeah, here's Amazon's guidance numbers. Q1 revenue at 155.5 versus 158.48 expected. So a miss there on guidance. Their AWS numbers were a little bit weak. Versus what they expected. They expected I know they missed AWS numbers by a small margin. Yeah, their Q4 AWS net sales showed up at $28.79 billion versus $28.82 billion expected. So they missed slightly there. Hey, thank you, Martin. Appreciate it, brother. Thank you, man. So I'm seeing a surge in viewers. Where are you guys coming from? Curious. Oof. Germany, Pittsburgh, Italy. Trader TV. Hey. Dublin, Ireland, Spain. The land of Canadiana. I love it, man. I love it. I was once in the realm of Canadiana. Amazon going up. It went up. It's now technically red on the day, though. Hey, thank you, Robert. I appreciate it, man. Thank you so much. New York City, New Jersey. What's up, guys? Chile? Yeah, that's cool, man. Sweden? What did y'all think about who was the DJ from Sweden, man, that passed away? I thought his death was really sketchy. I'm drawing a blank on it. He's got good music. He remixed that Hey Brother song. Avicii, right? Yeah. I thought his death was sketchy. My wife and I watched the documentary on it. It didn't make any sense to me. Yeah, tomorrow is interesting because tomorrow we have the non-farm payroll report, right? Like tomorrow's non-farm payroll report, incredibly important. In a market that has been hounded by tariff news, DeepSeek's AI pessimism, and all that stuff, tomorrow's non-farm payroll report is going to be a massive influence. Payrolls are really, really, really important for a few different reasons. The main one, number one, we also have unemployment. We have payrolls and unemployment data dropping at 8:30 tomorrow. With that said, non-farm payrolls are really, really important because inflation fears are here. And again, a market that's plagued with tariff news and economic uncertainty and all that stuff. Non-farm payrolls tomorrow are incredibly important. We'll have thousands of people here watching that when it drops. And again, we're going to stream the full earnings call in 20 minutes as well, Chad. So stick around. We're going to stream the full call regardless. But yeah, y'all just be careful, man. The question is, does the market want higher or lower payrolls? And again, I'm here to argue the market kind of wants lower payrolls, not higher. I think the market genuinely fears inflation, and it's something that they're going to panic if we get much higher. Like the last time the market showed up, let me see what the market did with the last non-farm payroll report. Last non-farm payroll report was... What did they release? Somebody give me a date. The last NFP report was in January 10th, right? So if we take a look at like the Q, we showed up way higher than expected. Way higher than expected. Let me put like a... And so I want to see the net effect of this. Okay. All right, so the last NFP was January 10th, and it was way higher than expected. Is this it? No. Yeah, and look at this. So like, look at this. So this is what the payrolls did last time, and it was exactly in the same correlation that we talked about, right? And I told people this before the report dropped, that the market feared inflation. At this point in time, a month ago as well, January 10th. So the payroll data came out here. Look at that. And then look at this dump in markets. Now today, you know, I don't think tomorrow we're going to get as much volatility as today or as January 10th, because the expectations are much lower than they were, or much higher than they were at the time. Last time, I can't remember what were the expectations. So I think there's a chance we won't get as much volatility, but nobody freaking knows here. We'll just have to be careful. How much would Amazon stock be after 5 earnings calls today? I mean, I'm not sure how you want me to answer that, Abby. Are you asking me what Amazon's price would be after the earnings call at 5 today? Nobody knows. Nobody knows. Yeah, it was 256 versus 160. Thank you, Mo. Appreciate it. All right, guys, we got 15 minutes left. Let me put the timer up. We got 15 minutes left. A little bit over that, actually. We got like 17 minutes or so. Do me a favor, bump that like button, hit the subscribe button as well, chat. We appreciate it. Is day trading your full-time job? No. I'm in marketing. I'm in marketing. You know. think something big is coming with mostly bad earnings this week. Elf dropping even more? Is it really? Elf down to 68.40s.
Wow.
Alright, guys. Alright, chat. We still got about 800 viewers waiting for this earnings call in about 15 minutes. Amazon dividend would be dope. I'm going to hold breath for it. Yeah, I don't know if it's going to increase after earnings. I really don't. The earnings are already out. Let's be honest. So the earnings are already out, guys. They've dropped already. The numbers are here already. Now, Amazon beat EPS, beat revenue, missed AWS numbers, missed guidance. Okay? So again, beat EPS, beat revenue, missed AWS sales, and missed guidance numbers, right? That's Amazon's numbers, right? But they're kind of flat. I think they kind of contradict each other. Not contradict, but they kind of cancel each other out. In one way, they beat metrics by a large margin. They had their strongest quarterly revenue and EPS ever. I'm pretty sure. I'm pretty sure they had their strongest quarterly EPS and revenue ever. Let me confirm this, but I'm pretty sure. Yeah, Amazon ended up showing up 186. That is light years above their last strongest quarter ever for EPS, right? Again, 186. Their revenue showed up at 187, almost 190. Their strongest one prior to that was in the 160s. So again, their strongest quarterly revenue and EPS ever. So that's good, of course. This channel is the chillest. Definitely top 3 chillest channels ever. What's your top gamble gain per one contract? If Jerome Powell steps outside tomorrow and stumps his big toe on his right foot at 8:27.5 Eastern Standard Time, does the S&P 500 drop 3% or go up 97%? Like, I don't know what you guys are asking me. Like, nobody knows the questions y'all are asking me except for Lucky. I don't know how much I'm going to gamble per contract. It depends on what kind of contract, right? If it's a E-mini contract, I'm usually gambling maybe $20 to $200 per if I can help it. If it's a micro contract, I'm usually gambling like $40 or $50 per if I can help it, right? But that depends. What do you think about crypto right now? I think Bitcoin's going to consolidate around the 90s for an extended period of time, and that's okay. Bitcoin hit a huge milestone in movement and price. It hit 100K. A lot of people would say that would never happen. A lot of Bitcoin haters were silenced over the last 6 months. But now that we've hit that point, it's not a feasible thing to just keep on running into, infinitely up. It's not a reasonable expectation for it, I think. I think you have to have reasonable expectations for it, and I think a reasonable expectation moving forward for Bitcoin is that it consolidates in around the 90s. I'm not even going to say at the 90s, and I've said this for 4, 5, 6 months, and honestly, we got exactly that. I've said this really for like 2 or 3 months since we hit 100K. This was my thesis. Bitcoin would consolidate around 90s for an extended period of time, and really, we've got basically that. It's been around in between like 105 and 90 since I said that, and it's been absolutely true. I think it's logical and it makes sense. It's going to pick up steam. Maybe it's going to drop down to 70s or something like that before it goes on another big run, is what history, is what the next step in the pattern would be if we look at the history of price. It doesn't mean it's definitive. It's never absolute. It's never going to happen. Like, we don't know for sure. We hope it happens, and it's logical in the next step of events, but we'll have to wait and see. In 11 minutes, we have the earnings call starting. Amazon's earnings call. Actually, I'm going to switch my headphones out so we can kind of get this done. Can y'all hear the music? And again, the reason you should tune into this one is because the volume's gonna be turned up, man. I've learned how to turn the volume up. Let's see. Yeah, so again, we're going to turn the volume up. Music's perfect. Okay, good. As long as y'all can hear it. I'm going to turn it up a little bit louder. And so the music might be a little bit louder leading into the call because I'm orchestrating this for the call specifically. So just stick around. What's your best guess on how long we should let tariffs play out before buying into energy commodities? I think it's super nuanced, man. I think there's a cost to each. To a point, it's like picking up pennies in front of a train track. Like tariffs are going to serve some purpose. People are mad about them, and I get it, but they're going to serve some purpose. It just depends. We just can't let it go too long. And the big boys in politics are going to, and are going to know a lot more information and have a lot more data behind that than I do. So. Yeah, Amazon's down a little bit from the call. Again, it missed AWS numbers. So it missed AWS numbers. It missed guidance. And the guidance, I told you guys before the call, you want to pay attention to AWS numbers. What time is the Amazon 5 p.m. earnings call? I don't know, bro. It's definitely not at 5 p.m. No. What do you think about Tesla right now? Tesla's been volatile and dropping a lot lately. Hit almost 500. It's down over 25%, down to 370s right now. So that's a 25% drop, or it's a 20% drop, over 20% drop. But yeah, it's a big drop. Point is, it's not a small drop, and maybe that's the time to buy it up. I don't know. It depends on what you think the future of FSD is, and we'll have to wait and see. Is the right thing just to invest in the S&P and forget about it? Depends on the person. Some people are going to have better results handpicking blue chips that they like. And then others are going to have better results just diversifying and DCAing into indices, I should say. And neither of them are necessarily wrong. It just depends on the person. Depends on, it's not a broad brush type of thing. Some people are better at analytics. Let's just be blunt here. Some people are not good. Some people are good at analyzing companies for future profit. Some people are not. And it's not just about analytics. It's about patience and restraint. The people that make the most money investing in stocks are people who generally are able to buy, add, and sit on their positions. The people that are worst at long-term investing are people who get emotional, get their ego in the way. They're like, oh, I'm up 30%. I'm going to take profit. They try to time the market too much. Whenever generally outperforming everybody else is going to be just DCAing into blue chip stocks or indexes long term and sitting on those for generations, right? It'll build generational wealth. It will earn you thousands of % over the lifetime. And if you're smart enough and you can just leave it alone, but most people can't leave it alone. Most people are desperate to take profit, desperate to jump in and out of markets. They're watching their portfolio too heavily. And in that regard, in some ways, like money managers are a good thing because they know to just leave it alone. They don't have time to watch it like that. They just leave it alone. They let it sit. They let it compound. And take advantage truly of compound interest, which is what a lot of retail traders don't do. They just get excited over 20, 30% gains, and they think they're doing good, but really they're missing out on thousands of % long-term for 30% gains short-term. And so that's what it is. Not an investment professional. Don't copy me, though. I have no idea what I'm talking about. But I don't think I'm wrong either. No, I personally don't. Joe, depends on if you have the buying power to just buy Tesla or not. Or I guess if you want to take advantage of the leverage aspect of them, sure. But I'm not a big fan of them. All right, guys, we are here, ready, waiting. Yeah, that's the way, Lost. It really is the way. I mean, it depends on whether you're imminently going to retire. I always talk about this, right? Like, investing's good in stocks, I mean, generally. I say generally too much, but investing is generally good. But if you're about to imminently retire, it might not be good. You know, there's always outliers too. And that's why I say generally so much, is because there's always outliers. I don't want people to think that everybody should just buy and sit. Like, if you're 70 years old and, you know, you've been saving your whole life and you're kind of struggling in finance, you don't have that much money, but your investments are performing well, it might be time to liquidate and live, you know, versus if you're 20, you know, 15, 20, 30, whatever, and you got decades on your hands to chill and wait and let it compound. You know, your decision there is going to depend on how old you are and what your plan is. If you're young, I think it's best to just let it sit, let it cook, let it compound. If you're older and you got to retire soon, anything could happen. Market can crash if you get unlucky, and there goes decades potentially of gains, or at least years of gains that you miss out on because you got unlucky. So it's all depending on that stuff. I think if I'm showing like 165, 170 expected. I think the market fears inflation, and higher is going to be worse. But who freaking knows, man? We don't know what the data is going to show up as. We don't know what the market's going to do. We really don't. Who knows? Palantir's freaking crazy, yeah, for sure. It's up. All right, guys, we got the Amazon call. Hey, I'm gonna mute the music and I'm gonna turn the volume super up here for this call. Yeah, so we're gonna turn the volume super up here for this call. When the call starts, tell me if it's too loud. Tell me if it's not loud enough or too loud. It should be loud enough. We're going to turn it up. Where will Amazon close, you think, guys? I did this poll. I asked people, does Amazon share price close green today? Most people are bullish. 72% say yes. 28% say no. All right, 2 minutes, chat. 2 minutes. John spitting facts. We try over here, bro. All right, 2 minutes, chat. 2 minutes. Palantir, that PE ratio works the opposite. Yeah, I mean, PE ratio is super. It's hundreds now for Palantir. Kind of crazy, but hey, I'm not mad at it, I guess. Go Palantir. As long as it doesn't cause traders to lose too much money if it dips, which is possible. All right, guys, you guys ready? One minute. Let me exit out of some of these things. All right, chat. We got 45 seconds. Yeah, I mean, bullish is usually the winner because people are generally bullish more than bearish. I mean, smart investors are bullish long term. Like a lot of like retail rookies are overly short because they want to be contrarian and pessimistic because they haven't really been around the market long enough to realize how much it goes up. But most experienced people are more bullish. It just depends on what kind of situation we're in, how much the market's up over the last few. All right, guys, let's get ready. Again, once I unmute this call, let me know if it's loud enough. All right, let me know if it's loud enough. I'm going to start listening to the call now. I don't know why it's so low here. All right, guys, waiting here. Yeah, they haven't started yet. We're sitting here waiting. We're live. Just again, once they start, give me a test of how loud it is.
Standing by. Good day, everyone, and welcome to the Amazon.com fourth quarter 2024 financial results teleconference. At this time, all participants are in a listen-only mode. After the presentation, we will conduct a question-and-answer session. Today's call is being recorded. And for opening remarks, I will be turning the call over to the Vice President of Investor Relations, Dave Fildes. Thank you, sir. Please go ahead.
Hello, and welcome to our Q4 2024 financial results conference call. Joining us today to answer your questions is Andy Jassy, our CEO, and Brian Olsavsky, our CFO. As you listen to today's conference call, we encourage you to have our press release in front of you, which includes our financial results, as well as metrics and commentary on the quarter. Please note, unless otherwise stated, all comparisons in this call will be against our results for the comparable period of 2023. Our comments and responses to your questions reflect management's views as of today, February 6th, 2025 only, and will include forward-looking statements. Actual results may differ materially. Additional information about factors that could potentially impact our financial results is included in today's press release and our filings with the SEC, including our most recent annual report on Form 10-K and subsequent filings. During this call, we may discuss certain non-GAAP financial measures. In our press release, slides accompanying this webcast, and our filings with the SEC, each of which is posted on our IR website, you will find additional disclosures regarding these non-GAAP measures, including reconciliations of these measures with comparable GAAP measures. Our guidance incorporates the order trends that we've seen to date and what we believe today to be appropriate assumptions. Our results are inherently unpredictable and may be materially affected by many factors, including fluctuations in foreign exchange rates, changes in global economic and geopolitical conditions and customer demand and spending, including the impact of recessionary fears, inflation, interest rates, regional labor market constraints, world events, the rate of growth of the internet, online commerce, cloud services, and new and emerging technologies, and the various factors detailed in our filings with the SEC. Our guidance assumes, among other things, that we don't conclude any additional business acquisitions, restructurings, or legal settlements. It's not possible to accurately predict demand for our goods and services, and therefore our actual results could differ materially from our guidance. And now, I'll turn the call over to Andy.
Thanks, Dave. Today we're reporting $187.8 billion in revenue, up 10% year over year. Given the way the dollar strengthened throughout the quarter, we saw $700 million more of foreign exchange headwind than we anticipated at guidance. Without that headwind, revenue would have been 11% year over year and exceeded the top end of our guidance. Operating income was $21.2 billion, up 61% year over year, and trailing 12-month free cash flow adjusted for equipment finance leases was $36.2 billion, up $700 million year over year. We're pleased with the invention, customer experience improvements, and results delivered in 2024 and have a lot more planned in 2025. I'll start by talking about our stores business. We saw 10% year-over-year revenue growth in our North America segment and 9% year-over-year in our international segment, excluding the impact from foreign exchange rates. Our continued focus on expanding selection, lowering prices, and improving convenience drove strong unit growth that even outpaced our revenue growth. We continue to add to our broad range of selection, giving customers choice across a variety of price points. We welcome notable brands to our store throughout 2024, including Clinique, Estée Lauder, Oura Rings, and Armani Beauty. We continue to add to the hundreds of millions of products offered from our selling partners, who made up 61% of items that we sold in 2024, our highest annual mix of third-party seller units ever. We also launched Amazon Haul for U.S. customers in Q4, which offers customers an engaging shopping experience that brings ultra-low-price products into one convenient destination. It's off to a very strong start. Customers continue to want Amazon to be the place they rely on for sharp pricing. In the fourth quarter, consumers saved more than $15 billion with our low everyday prices and record-setting events during Prime Big Deal Days in October and Black Friday and Cyber Monday around Thanksgiving. Additionally, Profitero's annual pricing study found that entering the holiday season, Amazon had the lowest online prices for the 8th year in a row, averaging 14% lower prices on average than other leading retailers in the U.S. Our speed of delivery continues to accelerate, and 2024 was another record-setting year for Prime members. We expanded the number of same-day delivery sites by more than 60% in 2024, which now serve more than 140 metro areas, and overall, we delivered over 9 billion units the same or next day around the world. Our relentless pursuit of better selection, price, and delivery speed is driving accelerated growth in Prime membership. For just $14.99 a month, Prime members get unlimited free shipping on 300 million items, often same-day or one-day delivery, exclusive shopping events like Prime Day, access to a vast collection of premium programming and live sports on Prime Video, ad-free listening of 100 million songs and podcasts with Amazon Music, access to unlimited generic prescriptions for only $5 a month, unlimited grocery delivery on orders over $35 from Whole Foods Market and Amazon Fresh for $9.99 a month, a free Grubhub Plus membership with free unlimited delivery, and our latest benefit of a 10-cent per gallon fuel discount at BP, Amoco, and AM/PM stations. When you think about this as a whole, and also compared to many other membership services that are comparably or more expensively priced that offer just one benefit like video, Prime is a screaming deal, and we have more coming for our Prime members in 2025. We also remain squarely focused on cost to serve in our fulfillment network, which has been a meaningful driver of our increased operating income. We've talked about the regionalization of our U.S. network. We've also recently rolled out our redesigned U.S. inbound network. While still in its early stages, our inbound efforts have improved our placement of inventory so that even more items are closer to end customers. Ahead of Black Friday in November, we'd improved the percentage of ordered units available in the ideal building by over 40% year over year. We've also spent considerable time optimizing the number of items we send customers in the same package, which reduces packaging, is more convenient for customers, and less expensive for us to fulfill. And our per-unit transportation costs continue to decline as we build out and optimize our last-mile network. Overall, we've reduced our global cost to serve on a per-unit basis for the second year in a row, while at the same time increasing speed, improving safety, and adding selection. As we look to 2025 and beyond, we see opportunity to reduce costs again as we further refine inventory placement, grow our same-day delivery network, and accelerate robotics and automation throughout the network. In advertising, we remain pleased with the strong growth on a very large base, generating $17.3 billion of revenue in the quarter and growing 18% year over year. That's a $69 billion annual revenue run rate, more than double what it was just 4 years ago at $29 billion. Sponsored products, the largest portion of ad revenue, are doing well, and we see runway for even more growth. We also have a number of newer streaming offerings that are starting to become significant new revenue sources. On the streaming video side, we wrapped up our first year of Prime Video ads, and we're quite pleased with the early progress and head into this year with momentum. We've made it easier to do full-funnel advertising with us. Full funnel is from the top of the funnel with broad reach advertising that drives brand awareness to mid-funnel, where sponsored brands let companies specify certain keywords and audiences to attract people to their detail pages or brand store on Amazon, to bottom of the funnel, where sponsored products help advertisers surface relevant product ads to customers at the point of purchase. We make this easy for brands to sign up for and deploy across our growing advertising. We also have differentiated audience features that leverage billions of customer signals across our stores and media destinations. From Amazon Marketing Cloud's secure clean rooms, providing advertisers the ability to analyze data, produce core marketing metrics, and understand how their marketing performs across various channels, to our new multi-touch attribution model that helps advertisers understand how their marketing is working. If an advertiser uses streaming TV, display, sponsored products, and other ad types in their campaign, multi-touch attribution will show the relative contribution of each to their sales. Moving on to AWS. In Q4, AWS grew 19% year over year and now has a $115 billion annualized revenue run rate. AWS is a reasonably large business by most folks' standards, and though we expect growth will be lumpy over the next few years as enterprise adoption cycles, capacity considerations, and technology advancements impact timing, it's hard to overstate how optimistic we are about what lies ahead for AWS's customers and business. I spent a fair bit of time thinking several years out, and while it may be hard for some to fathom a world where virtually every app has generative AI infused in it, with inference being a core building block just like compute, storage, and database, and most companies having their own agents that accomplish various tasks and interact with one another, this is the world we're thinking about all the time. And we continue to believe that this world will mostly be built on top of the cloud, with the largest portion of it on AWS. To best help customers realize this future, you need powerful capabilities at all three layers of the stack. At the bottom layer, for those building models, you need compelling chips. Chips are the key ingredient in the compute that drives training and inference. Most AI compute has been driven by NVIDIA chips, and we obviously have a deep partnership with NVIDIA and will for as long as we can see into the future. However, there aren't that many generative AI applications at large scale yet. And when you get there, as we have with apps like Alexa and Rufus, costs can get steep quickly. Customers want better price performance, and it's why we built our own custom AI silicon. Trainium 2 just launched at our AWS reInvent conference in December, and EC2 instances with these chips are typically 30 to 40% more price performant than other current GPU-powered instances available. That's very compelling at scale. Several technically capable companies like Adobe, Databricks, Poolside, and Qualcomm have seen impressive results in early testing of Trainium 2. It's also why you're seeing Anthropic build their future frontier models on Trainium 2. We're collaborating with Anthropic to build Project Rainier, a cluster of Trainium 2 Ultra servers containing hundreds of thousands of Trainium 2 chips. This cluster is going to be 5 times the number of exaflops as the cluster that Anthropic used to train their current leading set of Claude models. We're already hard at work on Trainium 3, which we expect to preview late in 25, and defining Trainium 4 thereafter. Building outstanding performing chips that deliver leading price performance has become a core strength of AWS's, starting with our Nitro and Graviton chips in our core business, and now extending to Trainium and AI, and something unique to AWS relative to other competing cloud providers. The other key component for model builders is services that make it easier to construct their models. I won't spend a lot of time in these comments on Amazon SageMaker AI, which has become the go-to service for AI model builders to manage their AI data, build models, experiment, and deploy these models, except to say that SageMaker's HyperPod capability, which automatically splits training workloads across many AI accelerators, prevents interruptions by periodically saving checkpoints and automatically repairing faulty instances from their last saved checkpoint and saving training time by up to 40%. It continues to be a differentiator. Received several new compelling capabilities at reInvent, including the ability to manage costs at a cluster level and prioritize which workloads should receive capacity when budgets are reached, and is increasingly being adopted by model builders. At the middle layer, for those wanting to leverage frontier models to build Gen AI apps, Amazon Bedrock is our fully managed service that offers the broadest choice of high-performing foundation models with the most compelling set of features that make it easy to build a high-quality generative AI application. We continue to iterate quickly on Bedrock, announcing Luma AI, Poolside, and over 100 other popular emerging models to Bedrock and reInvent. In short order, We also just added DeepSeek's R1 models to Bedrock and SageMaker. And additionally, we delivered several compelling new Bedrock features at reInvent, including prompt caching, intelligent prompt routing, and model distillation, all of which help customers achieve lower cost and latency in their inference. Like SageMaker AI, Bedrock is growing quickly and resonating strongly with customers. Related, we also just launched Amazon's own family of frontier models in Bedrock called Nova. These models compare favorably in intelligence against the leading models in the world, but offer lower latency, lower price, about 75% lower than other models in Bedrock, and are integrated with key Bedrock features like fine-tuning, model distillation, knowledge bases or RAG, and agentic capabilities. Thousands of AWS customers are already taking advantage of the capabilities and price performance of Amazon Nova models, including Palantir, Deloitte, SAP, Dentsu, Fortinet, Trellix, and Robinhood, and we've just gotten started. At the top layer of the stack, Amazon Q is the most capable generative AI-powered assistant for software development and to leverage your own data. You may remember that on the last call, I shared the very practical use case where Q Transform helped save Amazon's teams $260 million and 4,500 developer years in migrating over 30,000 applications to new versions of the Java JDK. This is real value, and companies asked for more, which we oblige with our recent deliveries of Q transformations that enable moves from Windows.NET applications to Linux, VMware to EC2, and accelerates mainframe migrations. Early customer testing indicates that Q can turn what was going to be a multi-year effort to do a mainframe migration into a multi-quarter effort, cutting by more than 50% the time to migrate mainframes. This is a big deal, and these transformations are good examples of practical AI. While AI continues to be a compelling new driver in the business, we haven't lost our focus on core modernization of companies' technology infrastructure from on-premises to the cloud. We signed new AWS agreements with companies including Intuit, PayPal, Norwegian Cruise Line Holdings, Northrop Grumman, the Guardian Life Insurance Company of America, Reddit, Japan Airlines, Baker Hughes, the Hertz Corporation, Redfin, Chime Financial, Asana, and many others. Consistent customer feedback from our recent AWS reInvent gathering was appreciation that we're still inventing rapidly in non-AI key infrastructure areas like storage, compute, database, and analytics. Our functionality leadership continues to expand, and there were several key launches customers were abuzz about, including Amazon Aurora DSQL, our new serverless distributed SQL database that enables applications with the highest availability, strong consistency, Postgres compatibility, and 4 times faster reads and writes compared to other popular distributed SQL databases. Amazon S3 Tables, which make S3 the first cloud object store with fully managed support for Apache Iceberg for faster analytics. Amazon S3 Metadata, which automatically generates queryable metadata, simplifying data discovery, business analytics, and real-time inference to help customers unlock the value of their data in S3. And the next generation of Amazon SageMaker, which brings together all the data, analytics services, and AI services into one interface to do analytics and AI more easily at scale. As 2024 comes to an end, I want to thank our teammates and partners for their meaningful impact throughout the year. It was a very successful year across almost any dimension you pick. We're far from done and look forward to delivering for customers in 2025. With that, I'll turn it over to Brian for a financial update.
Thanks, Andy. Starting with our top-line financial results. Worldwide revenue was $187.8 billion, an 11% increase year over year, excluding the impact of foreign exchange. This equates to an approximate $900 million headwind from FX in the quarter, which is about $700 million higher than what we'd anticipated in our Q4 guidance range. Excluding that additional FX headwind, we would have exceeded the top end of our revenue guidance range. Worldwide operating income was $21.2 billion, our largest operating income quarter ever, and was $1.2 billion above the high end of our guidance range. Across all segments, we continue to innovate for customers while operating more efficiently at the same time. In the North America segment, fourth quarter revenue was $115.6 billion, an increase of 10% year over year. International segment revenue was $43.4 billion, an increase of 9% year over year, excluding the impact of foreign exchange. Worldwide paid units grew 11% year over year, as our focus on low prices, broad selection, and fast shipping continues to resonate with customers. Shifting to profitability, North America segment operating income was $9.3 billion, an increase of $2.8 billion year over year. Operating margin was 8%, up 190 basis points year over year. In the international segment, operating income was $1.3 billion, an improvement of $1.7 billion year over year. Operating margin was 3%, up 400 basis points year over year. This marks the eighth consecutive quarter where we've seen year-over-year margin improvement in both the North America and international segments. 2024 also marks the second year in a row where we've lowered our global cost to serve on a per-unit basis. In the fourth quarter, we saw strong productivity in our transportation network from improved inventory placement, higher units per package, and reduced travel distances. We also saw improved productivity in our fulfillment centers. Overall, our teams executed extremely well throughout the quarter, and particularly during our peak seasons. I want to thank them for all they do to deliver for our customers. Looking ahead, we have several opportunities to keep lowering our costs through even better inventory placement, which also allows us to deliver items to customers faster. In the U.S., we're tuning our inbound network and continuing to expand our same-day delivery network. Globally, we're adding automation and robotics throughout our network. While these efforts will take time to implement and progress may not be linear, we have a good plan to continue to drive improvements in our cost structure. Advertising remains an important contributor to profitability in the North America and international segments. This quarter, we saw strong advertising revenue growth on an increasingly large base. We will also continue to invest in experiences that have potential to be important to customers in Amazon long-term, in areas like Alexa, healthcare, and grocery, as well as Kuiper, including the planned launches of our production satellites in the coming months. As a reminder, we currently expense the majority of the costs associated with the development of our satellite network. We will capitalize certain costs once the service achieves commercial viability, including sales to customers. Moving next to our AWS segment, revenue was $28.8 billion, an increase of 19% year over year. AWS now has an annualized revenue run rate of $115 billion. During the fourth quarter, we continue to see growth in both generative AI and non-generative AI offerings, as companies turn their attention to newer initiatives, bring more workloads to the cloud, restart or accelerate existing migrations from on-premise to the cloud, and tap into the power of generative AI. Customers recognize to get the full benefit of generative AI, they have to move to the cloud. AWS reported operating income of $10.6 billion, an increase of $3.5 billion year over year. This is a result of strong growth, innovation in our software and infrastructure to drive efficiencies, and continued focus on cost control across the business. As we've said in the past, we expect AWS operating margins to fluctuate over time, driven in part by the level of investments we're making. Additionally, we increased the estimated useful life of our servers starting in 2024, which contributed approximately 200 basis points to the AWS margin increase year over year in Q4. Now turning to our capital investments. As a reminder, we define these as a combination of cash CapEx plus equipment finance leases. Capital investments were $26.3 billion in the fourth quarter, and we think that run rate will be reasonably representative of our 2025 capital investment rate. Similar to 2024, the majority of the spend will be to support the growing need for technology infrastructure. This primarily relates to AWS, including to support demand for our AI services, as well as tech infrastructure to support our North America and international segments. Additionally, we're continuing to invest in capacity for our fulfillment and transportation network to support future growth. We're also investing in same-day delivery facilities and our inbound network, as well as robotics and automation to improve delivery speeds and to lower our cost to serve. These capital investments will support growth for many years to come. Turning to our revenue guidance for Q1, net sales are expected to be between $151 billion and $155.5 billion. I'd like to highlight two items impacting our Q1 revenue guidance. First, we estimate the year-over-year impact of changes in foreign exchange rates based on current rates, which we expect to be a headwind of approximately $2.1 billion in Q1 year-over-year, or 150 basis points. As a reminder, global currencies can fluctuate during the quarter, and just as we saw in Q4 with the strengthening of the dollar versus most other currencies. Second, a reminder that we are comping the impact of last year's leap year. The extra day contributed approximately $1.5 billion of additional net sales across our businesses in Q1 2024, or about 120 basis points to the year-over-year growth rate, which impacted all segments. Q1 operating income is expected to be between $14 billion and $18 billion. This guidance includes the estimated impact of certain updates to the useful life of our fixed assets. I'll provide a bit more detail in a moment, but on an aggregate basis, we estimate this will decrease full year 2025 operating income by approximately $400 million for the assets on our balance sheet as of December 31st, 2024. First, in Q4, we completed a useful life study for our servers and networking equipment and observed an increased pace of technology development, particularly in the area of artificial intelligence and machine learning. As a result, we're decreasing the useful life for a subset of our servers and networking equipment from 6 years to 5 years, beginning in January 2025. We anticipate this will decrease full year 2025 operating income by approximately $700 million. In addition, we also early retired a subset of our servers and network equipment. We recorded a Q4 2024 expense of approximately $920 million from accelerated depreciation and related charges, and expect this will also decrease full year 2025 operating income by approximately $600 million. Both of these server and network equipment useful life changes primarily impact our AWS segment. Lastly, we also completed a useful life study for certain types of heavy equipment used in our fulfillment centers and are increasing the useful life from 10 years to 13 years, beginning in January 2025. We anticipate this will increase full year 2025 operating income by approximately $900 million. As we turn the page to 2025, we're energized by the great work our teams have delivered. We'll remain focused on driving an even better customer experience, and we believe putting customers first is the only reliable way to create lasting value for our shareholders. With that, let's move on to your questions.
At this time, we will now open the call up for questions. We ask each caller to please limit yourself to one question. If you would like to ask a question, please press star, then one on your keypad. We ask that when you pose your question, you pick up your handsets to provide optimum sound quality. Once again, to initiate a question, please press star, then one on your touch-tone telephone at this time. Please hold while we pull for questions. Thank you. Our first question comes from the line of Mark Mahaney with Evercore ISI. Please proceed with your question.
Thanks. Two quick questions. So, Brian, that's $100 billion CapEx we should think about in 25. And then, Andy, would you describe that AWS growth as being currently moderated down by supply constraints? Do you see those across the industry, or do you see those materially impacting AWS today? Thank you very much.
So I'll take both those, Andy. On the CapEx side, as Brian mentioned earlier, we spent $26.3 billion in CapEx in Q4, and I think that is reasonably representative of what you can expect an annualized CapEx rate in 2025. The vast majority of that CapEx spend is on AI for AWS. it's, the way the AWS business works and the way the cash cycle works is that the faster we grow, the more CapEx we end up spending because we have to procure data center and hardware and chips and networking gear ahead of when we're able to monetize it. We don't procure it unless we see significant signals of demand. And so when AWS is expanding its CapEx, particularly in what we think is one of these once-in-a-lifetime type of business opportunities like AI represents, I think it's actually quite a good sign, medium to long term, for the AWS business. And I actually think that spending this capital to pursue this opportunity, which, from our perspective, we think virtually every application that we know of today is going to be reinvented with AI inside of it and with inference being a core building block, just like compute and storage and database. If you believe that, plus that altogether new experiences that we've only dreamed about are going to actually be available to us with AI, AI represents for sure the biggest opportunity since cloud and probably the biggest technology shift and opportunity in business since the internet. And so I think that both our business, our customers, and shareholders will be happy medium to long term that we're pursuing the capital opportunity and the business opportunity in AI. We also have CapEx that we're spending this year in our stores business, really with an aim towards trying to continue to improve the delivery speed and our cost to serve. And so you'll see us expanding the number of same-day facilities from where we are right now. You'll also see us expand the number of delivery stations that we have in rural areas so we can get items to people who live in rural areas much more quickly. And then a pretty significant investment as well on robotics and automation so we can take our cost to serve down and continue to improve our productivity. So that's the CapEx piece. I think the second question you asked, Mark, is really around AWS growth and whether this is being moderated down at all by supply chain constraints. Well, it is hard to complain when you have a multi-billion-dollar annualized revenue run rate business in AI like we do, and it's growing triple-digit percentage year over year. It's hard to complain. However, it is true that we could be growing faster if not for some of the constraints on capacity. And they come in the form of, I would say chips from our third-party partners coming a little bit slower than before with a lot of midstream changes. It take a little bit of time to get the hardware actually yielding the percentage healthy and high-quality servers we expect. It comes with our own big new launch of our own hardware and our own chips in Trainium 2, which we just went to general availability at reInvent, but the majority of the volume is coming in really over the next couple quarters and next few months. It comes in the form of power constraints, where I think the world is still constrained on power from where I think we all believe we could serve customers if we were unconstrained. There are some components in the supply chain like motherboards too that are a little bit short in supply for various types of servers. So, I think the team has done a really good job scrapping and providing capacity for our customers so they can grow. We're still growing at a pretty reasonable clip, as I mentioned earlier, but I do think we could be growing faster if we were unconstrained. I predict those constraints really start to relax in the second half of 25. As I said, I think we could be growing faster, even though we're growing at a pretty good clip today.
And our next question is from Eric Sheridan with Goldman Sachs. Please proceed.
Thanks so much for taking the question. I'll just ask one that's building on Mark's questions there. Andy, when you think about the news that came out of China over the last couple of weeks and think longer term about bending the cost curve lower with AI, I understood the commentary around CapEx for 2025, but when you look at where you sit in the industry, the move towards open source, elements of custom silicon, how do you think about bending the cost curve and either speeding up or amplifying time deployment to market or possibly, higher returns on capital for AI? Thanks so much.
Well, I'd say a few things because there are a few questions built into that. First of all, I think like many others, we were impressed with what DeepSeek has done. I think in part impressed with some of the training techniques, primarily in flipping the sequencing of reinforcement learning being earlier and without the human in the loop. We thought that was interesting ahead of the supervised fine-tuning. We also thought some of the inference optimizations they did were also quite interesting. For those of us who are building frontier models, we're all working on the same types of things. We're all learning from one another. I think you have seen and will continue to see a lot of leapfrogging between us. There is a lot of innovation to come. And, I think, if you run a business like AWS and you have a core belief like we do, that virtually all the big generative AI apps are going to use multiple model types, and different customers are going to use different models for different types of workloads, you're going to provide as many leading frontier models as possible for customers to choose from. And that's what we've done with services like Amazon Bedrock, and it's why we moved so quickly to make sure that DeepSeek was available both in Bedrock and in SageMaker, faster than you saw from others. And we already have customers starting to experiment with that. I think one of the interesting things over the last couple of weeks is sometimes people make the assumptions that if you're able to decrease the cost of any type of technology component, in this case we're really talking about inference, that somehow it's going to lead to less total spend in technology, and we have never seen that to be the case. We did the same thing in the cloud, where when we launched AWS in 2006, where we offered S3 object storage for 15 cents a gigabyte and compute for 10 cents an hour, which of course is much lower now, many years later. People thought that people would spend a lot less money on infrastructure technology, and what happens is companies will spend a lot less per unit of infrastructure, and that is very, very useful for their businesses, but then they get excited about what else they could build that they always thought was cost prohibitive before, and they usually end up spending a lot more in total on technology once you make the per unit cost less. And I think that is very much what's going to happen here in AI, which is the cost of inference will substantially come down. What you heard the last couple of weeks out of DeepSeek is a piece of it, but everybody is working on this. I believe the cost of inference will meaningfully come down. I think it will make it much easier for companies to be able to infuse all their applications with inference and with generative AI. And I think it's going to, if you run a business like we do, where we want to make it as easy as possible for customers to be successful building customer experiences on top of our various infrastructure services, the cost of inference coming down is going to be very positive for customers and for our business.
And the next question is from Doug Anmuth with JP Morgan. Please proceed.
Thanks for taking the questions. I'll stick with AWS to start. Just, Brian, maybe you can talk a little bit more about margins there, just given that they've kind of moved between the mid-20s to high 30s over the past 2 years. How should we think about that more normalized, especially as you're investing that much more in generative AI? And then just on the stores side, can you talk about the impact of less volume going through your shipping partner, UPS, going forward? And are you able to manage that incremental shipping that's required? Thanks.
Yeah, sure, Doug. Thanks for your question. First on AWS, yeah, we have seen a lot of fluctuation in operating margin in AWS. And, we've said historically that they will be lumpy, as you say, over time. And, the stage we're in right now, AI is still early stage. It does come originally with lower margins and a heavy investment load, as we've talked about. And in the short term, over time, that should be a headwind on margins. But over the long term, we feel the margins will be comparable in non-AI business as well. So, we're very pleased with the strong growth, focus on driving efficiencies in all of our data centers, saving power, reusing power in new generative AI applications, and just generally reducing costs. So very pleased with the performance of the AWS team, and look forward to strong 2025.
I'll take the UPS one, which is really UPS has been a partner of ours for many years, and we expect that we'll continue to be partners with UPS for many years. As you know, increasingly over the last several years, particularly accelerated by the pandemic, we have shipped a much larger percentage of our shipments through our own logistics network, our own last mile transportation network. And I think that's in part because we needed to scale up so fast in the pandemic with everything being shut down and needing to serve more of the total market segment share of retail units during that time, and needing to do it at a low cost structure because, of course, our customers expect low prices, and that's the nature of the business. I think UPS has decided that serving Amazon is lower margin for them, and so I think they've walked away from some of the volume that they otherwise could have had in the partnership. We're able to handle it with our own logistics capability, and we'll see how it continues to evolve.
And the next question comes from the line of Brian Nowak with Morgan Stanley. Please proceed.
Thanks for taking my questions. Andy, maybe to drill a little bit into the robotics acceleration that you talked about, any new data points, things you can share on learnings from Shreveport, and how do we think about sort of the scalability of savings or the timing that we could see a real impact on profitability from robotics? And then maybe just a bigger picture, Gen AI, GPU-enabled changes. Do you have other examples of how you see the Amazon retail shopping experience changing throughout 2025 as you're better using Gen AI or GPU-enabled machine learning and things?
Yeah. Okay. Well, on the robotics piece, what I would tell you is, since we've been pretty substantially integrating robotics into our fulfillment network over the last many years, we have seen cost savings, and we've seen productivity improvements, and we've seen safety improvements. And so we have already gotten a significant amount of value out of our robotics innovations. What we've seen recently, and I think maybe part of what you're referencing in Shreveport, is that the next tranche of robotics initiatives have started hitting production, and we've put them all together for the first time as part of an experience in our Shreveport facility. And we are very, very encouraged by what we're seeing there, by both the speed improvements that we're seeing, the productivity improvements, the cost to serve improvements. It's still relatively early days, and these all being put together are only in Shreveport at this point, but we have plans now to start to expand that and roll that out to a number of other facilities in the network, some of which will be our new facilities and others of which will retrofit existing facilities to be able to use those same robotics innovations. I'll also tell you that this group of, call it a half dozen or so new initiatives, is not close to the end of what we think is possible with respect to being able to use robotics to improve the productivity, cost to serve, and safety in our fulfillment network. And we have kind of the next wave that we're starting to work on now. But I think this will be a many-year effort as we continue to tune different parts of our fulfillment network where we can use robotics. And we actually don't think there are that many things that we can't improve the experience with robotics. On your other question, which is, I think, really about how we might use AI in other areas of the business than AWS, maybe more, and I think you asked about our retail business. The way I would think about it is that there's kind of two macro buckets of how we see people, both ourselves inside Amazon as well as other companies using AWS, how we see them getting value out of AI today. The first macro bucket, I would say, is really around productivity and cost savings. And in many ways, this is the lowest hanging fruit in AI. And you see that all over the place in our retail business. For instance, if you look at customer service and you look at the chatbot that we've built, We completely re-architected it with generative AI. It's delivering, it already had pretty high satisfaction. It's delivering 500 basis points better satisfaction from customers with the new generative AI infused chatbot. If you look at our millions of third-party selling partners, one of their biggest pain points is because we put a high premium on really organizing our marketplace so that it's easy to find things. There's a bunch of different fields you have to fill out when you're creating a new product detail page, but we've built a generative AI application for them where they can either fill in just a couple lines of text or take a picture of an image or point to a URL, and the generative AI app will fill in most of the rest of the information they have to fill out, which speeds our getting selection on the website and easier for sellers. If you look at how we do inventory management and trying to understand what inventory we need and what facility at what time, the generative AI applications we've built there have led to 10% better forecasting on our part and 20% better regional predictions. In all our robotics we were just talking about, the brains in a lot of those robotics are generative AI infused that do things like tell the robotic claw, what's in a bin, what it should pick up, how it should move it, where it should place it in the other bin that it's filling. So it's really in the brains of most of our robotics. So we have a number of very significant, I'll call it productivity and cost savings efforts in our retail business. They're using generative AI, and again, it's just a fraction of what we have going. I'd say the other big macro bucket are really altogether new experiences. And again, you see lots of those in our retail business, ranging from Rufus, which is our AI infused shopping assistant, which continues to grow very significantly, to things like Amazon Lens, where you can take a picture of a product that's in front of you. Check it out in the app. You can find it in the little box at the top. You take a picture of an item in front of you, and it uses computer vision and generative AI to pull up the exact item in a search result, to things like sizing, where we basically have taken the catalogs of all these different clothing manufacturers and then compared them against one another, so we know which brands tend to run big or small relative to each other. So when you come to buy a pair of shoes, for instance, it can recommend what size you need, to even what we're doing in Thursday Night Football, where we're using generative AI for really inventive features like defensive alerts, where we predict which player is going to blitz the quarterback, or defensive vulnerabilities, where we're able to show viewers what area of the field is vulnerable. So we're using it really all over our retail business and all the businesses in which we're in. We've got about 1,000 different generative AI applications we've either built or in the process of building right now.
And the next question comes from the line of John Blackledge with TD Cowen. Please proceed.
Great, thanks. Could you talk about the current speed of delivery, maybe how much more room to go there, and how is it driving the Everyday Essentials business? And then somewhat relatedly, any further color on inbound network efficiencies you would expect to see this year as you guys try to continue to lower the cost to serve? Thank you.
Yeah, I would say on speed of delivery that we measure this very carefully, and we measure both what the conversion rate is of somebody who views a product detail page with a faster delivery promise versus those that are slower, as well as what we see downstream from customers once they've bought with a fast promise and what they end up buying throughout the year. And we have not yet seen diminishing returns and being able to continue to improve the speed of delivery. It doesn't mean that there won't be instances in which people are happy to take products later. We have a program where if people want to pick a day during the week where they want to combine a bunch of their shipments and have it delivered then to be more sustainable and more environmentally friendly, they can. And we have plenty of customers who choose that, but we time in and time out see that people choose to buy from us more frequently when we're able to deliver to their homes or wherever they are much more quickly, and it leads to their actually using us for more of their everyday purchases when we can deliver more quickly. And I think that if you look at what we're doing with Prime Air, the promise there is for a number of items that we'll be able to deliver items to customers inside an hour. And I think when you're ordering everyday essentials where you need something more quickly, it's a big deal. And you see it's had a big impact on our everyday essentials. It's had a big impact on our pharmacy business, where people are able to get items same day now in lots of cities throughout the U.S., and they're just using us much more frequently than they had before. On the inbound network efficiencies, what I would tell you is we've made a pretty significant architectural change in our inbound network that we've been working on for the better part of a year, that we rolled out just a few months ago. Again, what we find when we make big architectural changes like this is that you tend to get some low-hanging fruit efficiencies early, but then there's all sorts of tuning and refinement you have to do once you actually see it working live across the really vast network. And we have all sorts of ways here where I think it's early, and I think we're going to get additional efficiencies throughout the year. But I expect that we'll have opportunities to keep taking our cost to serve down this year, and that'll be a big part of it.
And our final question comes from the line of Michael Morton with MoffettNathanson. Please proceed.
Hi, thank you so much for the question. I wanted to follow up on Andy's remarks about how you're using AI within the Amazon e-commerce experience, but I wanted to talk about the other side of the coin, and that's really the e-commerce discovery process that leads people to Amazon. There's a lot of companies rolling out agents and assistants, and I would love to hear how Amazon is planning for potential disruption in this funnel and what the plans are. You spoke about Rufus, maybe make that more prominent, but what you think the changes coming to the e-commerce funnel over the next several years would be great.
Well, I would say that I think retailers, ourselves, and probably lots of other retailers are all going to have their own say on how they want to interact with agents. I think that it's an emerging space, and if you think about the investments that we've made in our fulfillment network, in our website, in all the selection that we've built, how we organize it, most retailers are going to have kind of terms in which they're going to interact with agents, and we'll be no different that way. And I think that I do think that Rufus, if you look at how it impacts the customer experience, and if you actually use it month to month, it continues to get better and better. It's already, if you're buying something and you're on a product detail page, our product detail pages provide so much information that sometimes it's hard if you're trying to find something quickly to scroll through and find that little piece of information. And so we have so many customers now who just use Rufus to help them find a quick fact about a product. They also use Rufus to figure out how to summarize customer reviews, so they don't have to read 100 customer reviews to get a sense of what people think about that product. If you look at the personalization, really most prominently today, your ability to go into Rufus and ask what's happened to an order, or what did I just order, or can you pull up for me this item that I ordered 2 months ago. The personalization keeps getting much better. And so, we expect throughout 2025 that the number of occasions where you're not sure what you want to buy and you want help from Rufus are going to continue to increase and be more and more helpful to customers.
Thank you for joining us on the call today and for your questions. A replay will be available on the Investor Relations website for at least 3 months. We appreciate your interest in Amazon and look forward to talking with you again next quarter.
Okay, guys, so that is it for Amazon's earnings call. Amazon's down a couple percent, not the end of the world. Very good earnings call, I think. We see some people talking about tomorrow morning at the opening bell. Tomorrow, we have non-farm payrolls and unemployment data at 8:30, and this is major economic reports. This is one of the biggest of the quarter, biggest of the year. Last time we came in way over expected numbers for payrolls. Today, I'm not sure what we're going to get for payroll numbers, but last time I know we came in super high for payrolls. Non-farm employment or non-farm payroll data comes out tomorrow at 8:30. It's expected. I believe it's expected about 170,000, 165, 170,000. Last time it showed up at 250 something. I think it was like 256K, which is way over the expected number. And I think the market fears inflation, and high payrolls means inflation fears. So higher, the worse for market reaction, I think. And we'll see what happens. But that'll influence the market tomorrow. Everything else, we will stream live 8:30 tomorrow morning. So just be ready for that if you haven't already seen it. And again, guys, as I always say, if you want to check out one of my sponsors, if you want to learn to day trade, most day traders lose, but there's a cheaper way to learn. It's a funded account program called Top Step. Top Step gives you a 50K demo, and they test your skill with just a 50K demo account first. It comes with real-time data. It's only $49 a month for the base one, and so it's similar to like paying for a demo account. But if you pass their test, if you can make 3K in profit on that 50K demo without losing 2K first, following their rules and conditions, they fund you 50K with a 90% split, and they've paid out almost $200 million in the last few years. They fund thousands of traders. Great way to help support the channels by checking them out. It really does teach you how to day trade, follow rules. In the futures market, there's no PDT rules, so you can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. Patterns are very similar to blue chip stock patterns, but there's no PDT restrictions. Just a great way to learn how to day trade. And again, most day traders lose. This is a cheaper way. Usually it's cheaper. I can't guarantee anything. I can't guarantee it's going to be cheaper for you, but most day traders lose, and it's only $49 as your risk per account. So it's pretty cheap. Great way to learn. If you pass it, you get a 90% split. 50K funded account on the base one with a 90% split, and so if you make 20K afterwards, you get to keep 18 of that basically, since they're funding you the money. You also get to keep your first 10K in profit. It just makes sense. Zero commission. If you do sign up through my link, you get zero commission on Top Step X as well. And so if you want to check it out, I'll put the link up in the description. Remember, they're an affiliate of mine. I am biased because I get paid by them. They pay me money. I am biased because of it. Not an investment professional. Understand CFTC 4.41 hypothetical or simulated performance have limitations. Guys, we will be here tomorrow morning bright and early, live, streaming early for the payroll report, guys. In fact, I'm going to go ahead and schedule that thing right now, pretty soon at least. But yeah, good luck, guys. Hey, I love you all. Y'all have a great day. Y'all be safe in the market. Understand most traders lose. We'll see if Amazon bounces back. But again, we got a big economic report to influence, big catalyst tomorrow morning. We'll see what happens. Good luck. I'll see you guys tomorrow.